Okay, fantastic. Well, I'm pleased to be here today on the Decision Room with Jeff Socha. He is the CEO of Socha Capital. Welcome, Jeff.
Hey, thanks for having me, Josh.
Yeah, absolutely. So, Jeff can jump in with more details on his firm, but essentially, it's designed to help business owners and families manage complex wealth through customized strategies and alternative investments. Rare combination of policy insight, entrepreneurial leadership, and advisory experience to the world of private wealth and capital. So we'll talk a bit about his views on the industry, his own leadership and entrepreneurial journey, and some other things related to talent and strategy, et cetera. So
Sure.
again, welcome, Jeff.
Thanks. Excited to be here. Yeah.
Absolutely.
Go ahead.
Yeah, so maybe you can just dive in and tell us a little bit about your background in the business.
Yeah, sure. Well, it kind of starts by growing up in a family of entrepreneurs. My grandpa had started a construction company, and then my dad took that over. And I think growing up around that really influenced the clients that we serve today. And so the people we work for now are mostly entrepreneurs, and they've got a variety of things that they want help with. And you think mostly in financial services that, what does a financial advisor do? And most of them are really financial salespeople, and they're selling a portfolio or maybe selling some insurance or maybe both. But most entrepreneurs, they really want help with things like figuring out their cash flow. How do they manage risk? How do they figure out the proper legal planning? How do we cut their tax bill in half? Right. And then how do we coordinate their capital to do what they need it to do in a good investment plan for their family? So that's really our approach, which is a lot different than what you might get from a stereotypical financial advisor.
So do you operate more like a multifamily office, or how would you sort of describe your organization?
It's a lot more like that. I think though that today, I think the average cost of a single family office is around $5 million a year. So generally, I think anybody that's maybe short of 500 million or more net worth, it's not really practical for them to have a single family office. And so if they say they do, you wonder why they would spend that much money, or maybe they're not spending that much money and it's not a really great family office that they have. And so, for people that are worth $100 million, let's say, they want a lot of those services, but it doesn't make sense to spend that money. So having a service like ours where we can come in and provide them really acute levels of service and really high dose where they need it most, the high value, strategic value items, that's where we thrive.
Got it. And is your approach to sort of be able to ever offer everything from, kind of the, portfolio construction and asset management to the insurance and risk management side to the tax planning, et cetera, under one roof? Or how do you kind of put the services together?
Yeah, I think of our service more like a design build firm, if you will, where you start out meeting somebody and you're in kind of that architect phase, and you've got to get the blueprint and the renderings, and then you might need to go to engineering so that you can get it ready for construction. But when you're engineering those plans, you might need to bring in specialty engineers. And so we can do a lot of it in-house, but there's a lot of it that we need to bring in experts, and we've got a great network around the country for those experts. And so in addition to that, then you go into sort of, okay, now we have the construction drawings, let's put this in place. Well, now you've got to have the right people who can drive it and oversee it and project manage it. And we maybe self-perform some of that in-house, but there's a lot of it that we don't do. I mean, we don't do accounting, we don't do bookkeeping, we don't prepare and file tax returns, we don't draft legal documents. So there's a lot of pieces we don't do, but the pieces that we are doing are really around driving the strategic value and the quantified value, really. So instead of maybe a CPA who's focused on tax compliance, we're looking forward, thinking about tax strategy. What can we change to cut the tax bill in half? Or we're thinking about, legal planning, designing it from how do we get the right financial outcomes that we're looking for and the protections and the different things that we want. And then taking that to an attorney to have them draft it.
And so is that sort of design build metaphor kind of what differentiates Soha Wealth from some of the other forms? I mean, is that sort of the premise that you started the firm under?
Yeah, I definitely think so. If you look across an industry, a lot of times we get lumped in with the financial advisory industry. And I think on average, maybe a financial advisor has somewhere around 150 clients. And, if they spend a big chunk of their time doing sales, and then the other half of their time is spent trying to serve 150 families in a year, I don't know, maybe that equates to something like 4 hours a year they can put per family.
Yeah.
And our team, we have much different ratios. We currently have around 4 clients per staff person on our team. And, the clients are probably getting 4 hours a week worth of work versus 4 hours a year. And
Yep.
so I think just staffing differently to be able to deliver enough time and put enough time and effort and energy into those families is going to just be a game changer on the outcome.
Got it. And so do you start, I mean, I'm assuming at this level, it's probably a conversation. There's a relationship building period, but maybe someone sort of walks before they run with you. Um, is there sort of a diagnostic process you go through, or how does that, typically develop?
Yep. Yeah, it takes us about 90 days to onboard a new family. And so during those 90 days, it's a process of discovery and analysis, going through all of the related documents and information in their life and going through with a fine tooth comb, looking for, errors and holes and gaps, mistakes, improvement opportunities. And then putting those together into a clean scope of work and mapping that out in a schedule of what work needs to get done.
Got it. And in terms of, I know some of your materials reference like private market access and other things. So do you have like a particular approach to alternative investments or other things that maybe is a little bit different as well?
I don't know how different it is, but I mean, I think, we start with what we're trying to solve versus what we're trying to sell. And a lot of people in the financial world, they've got a thing and they're trying to sell it to you. And so that's the approach. In our world, it's not really about trying to sell you something. It's about trying to solve something. And so we get really clear around your goals and what it is that you want to accomplish and achieve. And then we sort of reverse engineer into what solutions bring the best cost benefit to deliver that. And then, so it leaves room for more solutions rather than having a product driven or sales driven approach.
Got it. And is there, in all your years of going through this problem solving exercise, is there sort of a number one problem that typically crops up that needs to be addressed?
Well, tax planning is a big piece. I think a lot of the entrepreneurs get really frustrated. A lot of the people with high income get really frustrated around the amount of tax they're paying. And so a huge pain point is, how do we get more tax efficient and make sure we're not overpaying our taxes?
And is there any sort of nugget you can drop or a common thought that?
I mean, it ranges. There's not a silver bullet. There's not a magic pill to it. You have really basic stuff that hopefully people are capturing all their deductions, funding qualified plans, writing off deductions related to their home offices. And there's really, really simple, basic things, just cleaning up the accounting and the deductions. And then from there, basically you move into sort of a second level of strategy where you start really putting in big ticket items that might save you hundreds of thousands of dollars in taxes versus just, maybe some small thing that saves you $5,000. You might have a bigger thing that saves you 500,000. And then for our larger families, you can continue to evolve that and, sort of a level 3 strategy, if you will, that's more sophisticated where you could save millions of dollars in taxes. So, they get pretty intricate and involved. So, happy to teach a course on it, but
yeah, sure.
the tax deductions really lie in a few key areas. Deductions are primarily in business ownership, real estate, and charity. And so if you own a business, if you own real estate, if you're charitable, there's a lot that can be done, you know.
And in, with the current administration and some of the, legislation that's been passed, and some of the current policies, has that evolved any strategies, or how do you kind of navigate the changing waters?
What just happened with the bill that was passed? We were set for next year to have significant negative tax ramifications. Negative meaning negative to the taxpayer.
Yeah.
Taxes were set to go up starting in January.
Correct.
And basically, the bill that was passed more or less preserved a lot of the tax benefits that are currently being enjoyed. So it had to be done under a new law, but it in effect extended a lot of that current treatment. I think it corrected a few things from the past. It brought back a couple of things that will accelerate, it brought back bonus depreciation, which should accelerate manufacturing and equipment sales. You should see a lot more investment in those things thanks to that. It restored increasing research activities, expensing treatment that was previously capitalized. And so that's a big change. It extended and improved treatment around opportunity zones, and it expanded the qualified small business stock sale options. So there's a lot of good things that came in it. I think there's some sort of small things like tax on tips or tax on overtime that are more, I don't know, call it political goodwill they felt like they needed to accomplish. They're not going to move the needle dramatically. But, there wasn't any, there wasn't really anything that I thought was overwhelmingly significant, brand new. Wow, look at this thing. I mean, they just kind of made some adjustments that, you'll see some people get really excited about, but I think in the grand scheme of things, they weren't dramatic adjustments. I think the ones I mentioned were probably the headliners.
Yeah. So if you were talking to, a business owner or an entrepreneur who's, kind of early into their work or journey, whatever phrase you want to use, in building their business, is there any advice you would give them to kind of properly lay the foundation, so maybe they don't have to undo things later, or they can kind of insulate themselves or set themselves up for the maximum benefits down the road?
I think that's important. However, I think the best advice to give somebody in that state is focus on growing revenue. Because if you put your focus on this stuff and you're not focused on growing revenue, this stuff won't matter. So first things first, is you've got to grow your sales and get cash. And if you don't get cash, it doesn't matter about keeping it or what you do to invest it or optimize it. So step one, it might be different if you say it's not your first venture. If you're an entrepreneur and you said, hey, I scaled something, I had a good exit, I sold it for 20, 50, $100 million, and now I'm going to do my next venture, and I'm well capitalized and I want to set it up properly. Sure. There's a lot of things to consider, around entity treatment and what kind of entity structure you're going to select, how your estate plan is set up from a legal standpoint. If you're a first-time entrepreneur and you have no idea if you're, what this business is going to do, I would say focus first on just getting traction and revenue and income. And you can fix this stuff once you sort of have proof of concept that you're going to be making millions of dollars a year. But in the beginning, focus on making money. That's the main thing.
And what about if you are thinking of exiting, or, it looks like that might be coming down the road? Like, when's the right time to start having a more serious conversation with someone like yourself?
Um, the farther in advance, the better. I would say 6 years out is great, because there's a lot of benefits with Section 1202 and qualified small business stock sale that might require some restructuring to put you into a C corp, and to maybe expand that with some estate planning, some non-grantor trusts. In addition to that, I would say if you're already past that window, 3 years is a great time, because 24 months is kind of accepted as the rule around where disguised sale rules kick in. So you want to get a lot of planning done, outside of 24 months if possible. So if you have 3 years runway, that's great planning. But the worst time is to tell us after you have a contract signed, or after you have a signed LOI, or after the money's already hit your bank. Those are very difficult situations to deal with.
Yeah.
You don't really have many options,
So maybe we could talk a little bit more about your own kind of personal leadership approach, and, what your philosophy was in building Socha Capital.
Sure. Yeah.
Any particular, either mission and vision that you built the business around, or core principles that you might want to discuss?
Yeah, sure. So what's really interesting, this is the second financial firm that I've started. The first financial firm I started, I sold it several years ago. And that one, I think I ran it more so the way that most companies are run. And you end up meeting with a consultant, and the consultant wants you to, put down these goals and these projections and say, okay, where are we going to be in 5 years and 10 years, and sort of set these numbers. And so we did that, and I just sort of picked numbers out of the air that were just kind of random. They were just big enough to get me excited, I guess. And what's interesting is when you go about planning that way, and you just sort of set these future targets just based on what do you think is a big number, essentially, it starts to affect your decision making, both day to day, and everything from the clients you take on, and the hiring you do, et cetera. And so, we ran a successful company. It worked out, but I just didn't really like the environment that created. And so after selling that, and then now starting this one, this firm is now based more on, I would say, journey goals, versus, let's call the past firm focused on destination goals. And so instead of worrying about where are we going to be in 10 years, I'm really focused on the things that are going to make this a great company. And the things that are going to make this a great company, I've kind of boiled down our laser focus around the ultimate experience. And so we want everyone that interacts with the firm, whether it be a client, an employee, a vendor, a partner, strategic, relationships. We want those people to have the ultimate experience interacting with our firm. And I really believe that the closer that we get to that ultimate experience, the greater those numbers 10 years out are going to be. And so instead of just saying, I don't know, let's just make up a number 10 years from now and say, let's have that number drive our goal. Why does anybody care? Right. But however, I really believe that the closer that we get to creating and delivering and living that ultimate experience, the bigger those future numbers and realization is going to be. So, while we could sit here and sort of create a 5 or 10 year forecast, and granted, the farther out you go on those is the fuzzier and the wider range of possibilities,
especially nowadays.
Yeah. So, we could create a forecast, if you'll call it, but we're not gonna plant a flag around a number and have that number drive us, right? So the thing that's driving us is around the ultimate experience. And I think the key ingredients to delivering that are our core values. Our core values of the firm are respect, growth, communication, and reliability. And I really believe that the closer that we get to really having every single person live those out fully and be a model example of those core values, I think that the closer we get to that, the closer we'll get to the ultimate experience, and the bigger that future will be. So, and that I would say is what kind of drives us day to day. One of the things that is part of our vision is around bringing clarity to our clients and bringing financial clarity specifically. And, I think what happens is a lot of times people are making decisions with not necessarily an absence of clarity, but maybe let's just call it a lack of clarity or suboptimal clarity. And their decisions could actually be better. They could have maybe less risk. They could have better outcomes. The more clarity we give, I think the greater it's going to improve the decision making. I also think the more clarity that we're able to provide, the clients are going to have greater sense of peace. But also we want to provide that clarity internally as well. And so I think clarity is a big component to that.
So I'm trying to think, like, is there a leadership lesson in there? It makes me think like of Simon Sinek. I don't know if I ever learned to pronounce his name right, but
Yeah.
I ever read the book Start With Why. Like, is that the lesson here? Like, really,
I would say
the first business and the second business, or what would you say?
I would say there's a couple of key lessons that led to that. One lesson was that when I sort of created arbitrary goals out in the future and allowed those to be what drove us, it changed the experience. And I don't think for the better, right? Because you were driven by made up numbers that were just, financial numbers or headcount numbers, et cetera. And to what end, right? And I think those kind of goals are the kind of goals that are easy for people who operate from a place of high need. An entrepreneur that feels like, well, I need to make this money, so I'm going to set these big financial goals. Having sold that and not needing the money and being able to do this firm from a place of low need gives me high power. And when you can approach things from high power and low need, it enables you to think differently and go, well, those numbers aren't motivating unless the experience is a good one, right? The financial outcomes are only worth it if the experience is a good experience. And so then you have to think, all right, well, let's focus more on how we are going to be today so that later we can have those results. So I think there's a lesson in there. I think the other lesson is those core values have kind of been curated over a couple of decades of what I think builds reputation. Our firm is a professional service firm, so it lives off of its reputation. In order to curate and build a reputation and maintain a good reputation, you have to be able to understand the key ingredients. And one of the key ingredients of a good reputation is trust. Well, how do you build trust? You have to communicate well, and you have to do what you say you're going to do when you said you're going to do it. That's all about communication and reliability. Well, and if you want to have a long-standing reputation, you can't just say, well, I did something good one time and then let that support you the rest of your life. So growth has to be a component. You have to be iterating. You have to be improving. You can't just be complacent. Complacent won't produce a good reputation, right? And then honestly, I think respect is maybe even the culmination. If you're doing the other ones, it's really hard to say you're reliable, you're a great communicator, you're constantly improving, and somehow simultaneously being disrespectful. So, but respect, I think, is a key piece. Nobody wants to feel disrespected.
So I'm curious from a talent point of view, and how have you approached finding people who align with that goal of providing the ultimate experience and living by those core values? Have you sort of batted 1,000, or was there some trial and error in there? Are there particular questions or a process you put people through to try to ensure not that they don't just have sort of the skills to do the job, but actually will do the job the way you'd like them to do it?
There has been tremendous trial and error. And in the early days of my first company, we just didn't have the right view of talent. It was we have more work, we need some more help. How do we find somebody that's cheap and that will help? And how do we pay them the least amount possible to just get somebody in here to help? And let's just get some helpers. And that was difficult. That was painful. I don't ever want to do that again. That was awful. The current firm, it's let's go look at benchmarking data. Let's find out what the best firms in the entire industry are paying. Let's look at the pay scale and let's commit that we're going to pay everyone here in the 80th percentile of the job we're asking them to do. So now our firm pays top dollar in the industry. So I don't think, it's not that we won't have people leave the company. I just think it will be really rare for anyone to ever leave this company for more money, right? So the compensation is really great. So when you're willing to compensate at the top of the industry, I think it helps you attract a lot of candidates. And then you have to really invest. I mean, we've hired a full-time internal recruiting team. We have invested significantly. We've leveraged outside resources, but you have to really put as much effort, I think, into talent acquisition as you do into client acquisition, because the reputation essentially is going to be the culmination of what the whole of the company delivers, which is really affected by all of the people you hire. And so we've had to get really intense interview processes that have many interviews. I think we're hiring currently about 1 out of 1,000 applicants. I don't know if it's because we're terrible or what. I would love to hire 1 out of 1 applicant, but
Yeah.
I don't know that that's realistic either. But I look at Elon's companies. I think they hire about 1 out of 500 applicants. So surely we can get that ratio. But significant testing around personality, significant testing around cognitive ability, interviews around culture fit, interviews around core values, specifically, and then of course we do some case study interviews that are intended to simulate working together. And I'm much more concerned with hiring the right type of person, the right kind of person, the right DNA, the right character, the right trait, you're going to say, than I am the experience. If I can get both, that's amazing. But if somebody says, "Hey, I've got the right resume experience, but I don't check any of the right, boxes for being the right type of person," no way, absolutely not. I don't care where you came from, not happening. Unless maybe we'll let you work here as a volunteer, maybe, but not on payroll. So,
right.
So you've got to be the right type of person,
Yeah. I mean, we talk about it a couple different ways, but one is, people typically get hired on skills and experience, but they get fired on behaviors. That's not to say they did something for cause, but that they just don't align with the, culture and the daily behavioral requirements of the role to fit into the organization. And
we try to hire and fire based on the behaviors and those core values. And so we can deal with a mistake, we can deal with losing money, but we can't deal with losing reputation, and losing reputation is going to come by having the wrong people who aren't striving for those values.
Yeah. So I'm sensitive that we're coming up on time here. I don't know if you have any other thoughts on talent. It sounds, honestly, I talked to a lot of people. We've worked with a lot of companies. The firm's been around since 1978. And, it sounds like you've got quite a comprehensive approach. And, I personally believe a lot in the psychometric piece, and I believe a lot in the type of, scenario interviewing, case study interviewing, that sort of thing to further test that out. So it sounds like you guys have put a good process together. So kudos to you on that front.
I think the key leadership lesson there is really deciding that the talent acquisition, giving that the same priority as client acquisition. And so most companies will invest heavily in sales, business development, et cetera. And then they just sort of kind of do maybe some post and pray, whatever, just get some people in the door with the talent. And then like, you're not going to end up with a great organization. And so if you want to have ideal clients, think how much effort you put into getting ideal clients. Well, you got to put the same effort. You have to raise the talent acquisition to the same priority level. And that's what we've done here.
Yeah, I have another one of my little phrases, which is, if you look at most people, not all, but most people who've built, sort of built, either risen to and helped to build or built from scratch really successful organizations, their hidden title is CTO, and that's Chief Talent Officer, because they figured out how to identify and develop, really quality talent, and that enables them to elevate and not take advantage of, but sort of, rising tide lifts all boats, and the better talent you have underneath, more strategic you can be, the better you can, invest your time in the things where you can add the most value to the organization.
Exactly.
So, 100% agree with you.
Yeah.
So I guess last question before we go here, what does success look like for you in the next few years, personally, in terms of your clients, for the firm as a whole? Anything else?
I mean, personally, it's being a good leader at home as much as it is at work, and being a good leader for my family as much as I try to in my work. For the business, it's really just, how do we get to that ultimate experience? And it's just having an insatiable desire to do better than we did yesterday and be better every day. That's really what it comes down to.
Yeah, great. Anything else, Jeff, you'd like to share before we finish up?
Yep. Thanks for having me today.
All right, great. Well, just going to wrap it up here. Jeff Socha.